Welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets. Today, we're really digging into some huge shifts happening right now.
Yeah, it feels like everything's moving so fast.
Totally. We're talking the AI arms race, who's winning the cloud battle, the whole chip situation with all the geopolitics involved.
Right, that's getting intense.
And even stuff like Figma's IPO showing how important design is becoming.
And Tesla always doing something different, like a diner.
Exactly. So we've waded through all the news to pull out the key stuff, the things you actually need to know, without getting totally overwhelmed.
Let's do it.
Okay, so first up, big tech and AI. Meta just made a pretty surprising announcement.
Oh, yeah. What's that?
They're planning a big jump in CapEx, that's capital expenditures, basically spending on stuff like data centers.
Ah, okay. More AI investment then.
Exactly. For 2026, similar levels to this year, it really signals they're staying aggressive on AI infrastructure.
But is it paying off now? Or is this all future hopes?
Well, that's the interesting part. The reports say AI is already boosting their existing products, ad pricing is strong, even with some advertisers pulling back.
So they're seeing returns already. That's actually pretty significant.
Yeah, but there's still this big question, right? How are they going to package their AI for the world, keep it in-house, open it up?
That's the core tension, isn't it?
Yeah.
They're getting ROI on ads, which is great for investors now.
Right.
But the big, shiny AI product that's still up in the air, proprietary versus open source, it's a huge strategic question for them.
That's strategic ambiguity, yeah. Meanwhile, Microsoft, their cloud, Azure, is just
On fire, pretty much. Yeah, AI is giving them a massive boost.
So is staying invested in Microsoft just the obvious move? I mean, they're getting huge. Does that worry anyone? Market concentration?
It definitely should be part of the conversation. Microsoft's doing incredibly well, no doubt. Azure's growth is phenomenal. But yeah, as these giants get bigger and bigger, especially fueled by something as fundamental as AI, you have to ask about market balance.
Makes it tough for the smaller guys.
It could, yeah.
Yeah.
Competing on scale becomes really, really hard.
Okay, so on the flip side then, Apple, reports say they're facing many headwinds.
The big one seems to be AI deployment. They're seen as slower.
Right. And that iPhone upgrade cycle we've all been waiting for.
Still hasn't really hit full speed. Yeah.
Now, there's maybe some growth coming back in China, tariffs aside. But the long view, people are saying Apple's becoming more like a consumer staple.
That's a really interesting way to put it, the razor blade model.
What does that actually mean for them, though, for their growth?
Well, it suggests a shift, right? Less about the huge wow product launches maybe, and more about leveraging that massive, loyal user base.
So services, accessories, that kind of thing.
Exactly. It's like you might not be super excited about your electricity bill, but you pay it every month. It's stable, sticky revenue.
Gotcha. Less flashy, maybe, but super reliable.
Especially if they're lagging a bit in the AI race. It provides a solid foundation. And speaking of battles, Amazon's feeling the heat too right now.
Yeah, AWS needs to show it's keeping up with Microsoft's cloud gains. That whole space is just incredibly competitive right now, all driven by AI spending.
It's definitely a key area to watch.
Okay, let's shift gears. From software and cloud to the hardware, the chips. This is where tech meets, well, global politics.
Oh yeah, high stakes.
NVIDIA, for example, they just put out a statement denying any backdoors in their chips.
Responding to those concerns out of China, following the U.S. lawmaker comments.
Exactly. It suggests that whole issue with their H20 chip for China. It's not exactly smoothed out yet.
No, it sounds like it's still pretty complex. What's interesting about the denial, though, is that it kind of implies the door isn't completely shut. Many thought China was just off limits for NVIDIA now.
Okay, so maybe there's still a path for some sales negotiations.
Potentially. Yeah. But it really highlights how critical security and trust are becoming. As AI gets built into everything, you can't just talk performance.
You need to trust the hardware itself.
Absolutely. It's a sovereign security issue now.
Wow. Okay, let's talk ARM. Totally different story there, it seems. Record performance.
Yeah, huge quarter for them. First time ever over $1 billion in revenue in a fiscal quarter. Royalties up 25% year on year.
What's driving that?
New compute systems, mainly. They've got more customers shipping, especially in data centers and even PCs now.
They're making big moves in automotive, too, right? Plus that data center CPU share goal.
Over 50% by year end, yeah. They are, like I said before, really doubling down, investing way more aggressively than people expect.
Because they see this huge growth opportunity.
Totally. And Project Stargate's a perfect example, that OpenAI SoftBank venture.
Right, the massive data center project, initial $5 billion investment.
Potentially way bigger down the line.
Yeah.
And ARM is the CPU of choice there. Think Grace Blackwell. They're even looking at chiplets.
Chiplets, like modular processors.
Kind of, yeah. Allows for really customized, efficient chips at data center scale. It's a big deal.
Okay, sounds amazing, but their stock dipped recently. You said licensing can be lumpy. Is that really all it is? Or is there a risk?
Well, markets react, you know.
Right.
But the sources suggest it's mostly timing on deals. The underlying demand is still really strong, really sticky.
Sticky because it's hard to switch away from ARM.
Exactly. Think about all the software built for ARM. Moving an entire ecosystem to a different architecture is, well, it's a massive lift. Huge undertaking.
So tariffs aren't really boosting them artificially, it's real growth.
Seems like it. The growth is coming from investments they made earlier in compute subsystems. They're just growing faster than the market overall.
And automotive, how big is that for them long term?
Potentially huge. EVs need power efficiency, especially with all the computing for autonomous driving.
Right, makes sense.
And the big players, Tesla, NVIDIA, Qualcomm, they all use ARM-based chips for their autonomous systems. It sets a strong trajectory. Cars are basically becoming data centers on wheels.
Data centers on wheels. I like that. Okay, let's talk Qualcomm then. They're trying hard to diversify beyond phones.
Yeah, that's their big push. They're projecting, what, $22 billion in non-handset revenue by fiscal 29, aiming for half their business to be outside phones.
That's a major shift. And they're growing their non-Apple chip business pretty fast, too.
Second year of 15% growth expected there. But the challenge is getting investors to see it.
Because everyone still thinks Qualcomm phone chips.
Pretty much. Investors might be over-indexing on the short term, focusing on the flat handset market and Apple moving to its own modems.
So how do they change that perception?
By highlighting their broad IP, It's not just communications. They have strong computing IP, CPU, GPU, AI accelerators, those NPUs for edge AI.
Okay, so it's about showing they can power AI in lots of different things, not just phones.
Exactly. That's driving leadership in other areas.
Like what? Where are they seeing this growth?
Industrial IoT is doing well, and especially these personal AI devices. Think Meta glasses.
Ah, right. And the Android market's helping too.
Yeah, growing faster than average for them. And the on-device AI stuff is getting real. Remember those demos from a couple of years ago?
Vaguely. Seemed kind of futuristic then.
Well, now it's happening. Samsung's S25 is apparently seeing triple the use of Google Gemini. And Qualcomm showed a 1 billion parameter model running on smart glasses.
On glasses? That's wild. For immediate response.
Yeah, like you talk to it, it responds instantly, running right there locally. That's serious on-device AI power.
Incredible. What about their car business? Is that ramping up too?
Definitely. They have a big pipeline of design wins, and as those cars actually launch, it turns into revenue.
And the amount of tech in cars is just exploding.
Totally. Digital cockpits, AI features, infotainment, ADS, autonomy.
Yeah.
The content per vehicle is accelerating fast.
And their relationship with ARM is okay, despite the lawsuit stuff.
They seem positive about the trial outcome. Say they have the licenses they need for their Orion CPUs, can keep building ARM-compatible stuff.
Okay, good to know. It's clear all this happens against a backdrop of global economics. Quick tariff update.
Right. The president extended the Mexico deadline by 90 days. But those 25% auto tariffs, 50% on steel and aluminum, they're still active. About $80 billion in imports affected. Just a reminder of the constant churn.
Definitely. Okay, let's pivot completely. Figma's IPO.
Yeah, quite the event.
The CEO called it surreal, said design is going public today. That feels significant, doesn't it? Like design moving up the food chain.
It really marks an evolution. Decades ago, design was maybe just making things look nice, lipstick on a pig, right?
Yeah.
Then, maybe a decade ago, it became about usability, how it works. But now, in 2025, with software easier to build, design is the differentiator. That's been Figma's bet all along.
Their design craft point of view. They want to be the engine for product development.
Exactly. It's not just coding anymore, it's the whole experience.
So how does AI fit into that? Seems like AI could automate design.
They see it as an opportunity. They talk about Figma Make, helping users go from a prompt, like a text description, all the way to an app.
Okay.
Combining prompting with actually manipulating the design directly. The CEO thinks we're in the MS-DOS era of AI right now.
Meaning very early days.
Super early. Their vision is to let designers use AI to explore tons of options, see the whole option space, But then the human adds the craft, the unique touch.
So AI assists, but humans differentiate. Lower the floor, raise the ceiling.
That's the idea. Make design more accessible and more powerful. Bring more people into it.
Interesting strategy.
Yeah.
And they're putting their money where their mouth is, right?
Yeah.
Raised $1.2 billion focusing on growth and AI over short-term profit.
Yeah, they were very clear about that in their S1 letter.
Yeah.
Make bold moves, invest in AI, even if it is profit short-term. It's a classic Silicon Valley growth play.
Risky, maybe, but focused. They're also eyeing M&A.
Scaled M&A, but with high standards.
Yeah.
Great team, cultural fit, main priority. And the CEO seems happy to be independent now. That Adobe deal feels like ancient history.
Yeah, $20 billion then. Wow. What about advice for retail investors? The IPO was hugely oversubscribed.
The CEO basically said, understand us.
Right.
Read the S1, look at the numbers, play with the product, maybe even try designing something yourself.
Get hands-on. Makes sense. And their reach is just massive. 80% of users outside the U.S.
Yeah, and 80% are non-designers. That's huge.
What does that tell you?
It shows design thinking is spreading everywhere. Product managers, marketers, writers, they're all using it to collaborate.
So it's become fundamental. Billions use products designed in Figma daily.
Google Maps, Uber, Netflix. And 95% of the Fortune 500 are customers. They're pretty much embedded in digital product creation globally.
Okay, last stop, Tesla. From IPOs to diners. Elon Musk opened that Tesla diner last week.
Yeah, interesting timing, right? Given their recent revenue decline.
Steepest since 2012. But it still drew huge crowds, people making pilgrimages. Shows the brand power is still intense.
Absolutely. The fervor, as they put it. The diner itself sounds kind of cool, actually. 50s, 60s drive-in vibe.
Yeah, Wagyu chili, shoestring fries, decadent American combat food.
Sounds good. Any downsides?
Well, reports mention long waits. Maybe the menu could be broader. And Optimus the robot isn't serving guests right now.
Huh. Maybe Optimus is unionizing for better oil breaks. But people were happy anyway.
Genuinely happy, yeah. It speaks to that Elon faithful thing.
Right. The fans wearing the "Don't Bet Against Elon" shirts talking about their life savings in the company.
They are completely bought into the vision. Robotaxi, Optimus, they're all in. The cyber cab was even there, roped off.
Wow. And Optimus made an appearance too?
Yep, lots of photos. It's this weird mix, right? Many fans are owners and investors.
That connection is incredibly strong. It's not just buying a car. It's buying into a future, a belief system almost. Yeah. That's powerful for pushing boundaries. So, quite a tour today. AI reshaping the giants like Meta and Microsoft, Qualcomm diversifying.
The whole chip landscape with NVIDIA and ARM navigating global tensions.
That's a good proving design is key.
And Tesla, just being Tesla, building diners and dreaming of robots.
It really shows how interconnected everything is, but also how different the paths to innovation can be.
It's truly amazing how quickly the tech landscape evolves, isn't it? So thinking about all this, the AI push, the chip foundations, the rise of design, here's something for you to chew on. Which of these big shifts do you think really becomes the next essential part of our daily lives? Like something we absolutely can't imagine living without?
That's a tough one. AI feels pervasive, but maybe the underlying hardware.
Or maybe it's the way we interact, the design. And which company's unique approach, their specific bet, do you think has the best shot at redefining a whole industry in the next few years? What part of this whole fast-moving story really grabs you?
Lots to think about there.
Definitely. Well, thanks for tuning in to Byte-Sized Tech. If you enjoyed the episode, like, comment, share, and subscribe for more fun tech discussions.